Well, let's get in Prakash Diwan then, our market expert. He's here to help us out with some fundamental analysis. Hi, Prakash. Good morning and good to see you, Ben. Well, what's your pick from the banking pack? You heard what J&K Bank, had to tell us about their business. Things uncertain over there. But a couple of large funds as well, they had put in some money out there and they were quite optimistic about a turnaround. Unfortunately, with these uncertain events, we'll have to see how things pan out. You have Yes Bank, where there's a potential deal. Sumitomo is looking at picking up a stake. That's what unconfirmed reports indicate. And yesterday, you had a couple of these banking names, like a Kotak Mahindra Bank, that did see some selling. So what do you like from the banking pack?
Good morning, Nigel. So let me also just add on the J&K Bank. It was a lovely discussion that you managed to have with the management. The numbers of the last quarter, wherever you see the improvement, actually tell you how much on track this growth was, before this attack happened and derailed, or at least has created a pause of sorts or question marks around it. But actually, if you see, the local economy out there is shaped up so brilliantly. It's just that the people have to realize what's beneficial for them and continue supporting that. But the numbers very clearly tell a very different picture, and there's enough to read between the lines. On the banking side, the way I look at, I told you, it's the private sector largest banks which will take off first, which they did with the ICICI, HDFC, and Axis of the world. Kotak also did its bit, of course. But it's now, the smaller banks or the mid-sized banks that will start contributing because, they are the ones who are much more agile. And as the credit offtake period starts kind of picking up, you'll probably see that. So if you recall, we mentioned about DCB sometime back when the numbers came. I seriously think that's like a bank which is underrated in terms of what it is capable of doing. It has very strong CASA franchise, lends to the right segments, doesn't do very stuff which is very adventurous except for, the yesteryear's plan to grow branches which they stopped. So, when you look at something like that, you believe that if the cycle needs to kind of take off and ROA start kind of moving strongly, these are banks that you need to look at where the delta is higher. Otherwise, you'll probably have even Federal is good, but Federal is, saturated at some point. They'll have to reinvent themselves. And that's why, the numbers weren't very encouraging or the market reaction wasn't equally encouraging. So that's a point. But I would look at a smallish bank for sure at this point in time. Otherwise, the biggies like ICICI and all definitely continue to hold promise, but that's more of an institutional play. Retail investors could probably look at something smaller. They don't need very high liquidity on a daily basis.
Prakash, morning. Would Yes Bank be one of the smaller banks you look at? It's in deal zone now. We don't know pricing. We don't know whether open. I mean, there are different reports. One suggests there will be an open offer. Others suggest it could be some different sort of a different structure which doesn't involve an open offer. So we don't know a lot. What are your thoughts?
No, good morning. So we absolutely, the bride is ready, but whether the marriage will happen and who's the group, what's very peculiar about this is that there are lots of things that need to kind of get stitched up before a deal actually happens in terms of, permissions from other lenders and other creditors and so many of the investors themselves. There's a lot of equity at play with the biggies like SBI and all, also a very clear stake there. My sense is every rise in Yes Bank will probably be seen as an opportunity for a lot of the investors of the past to exit. It's been quite some time, almost 4 or 5 years that it's been languishing in this zone. So a lot of people will find exits rather than, look at buying into the dip. So you'll see selling pressure because the equity is bloated. And till all of that gets to stabilize at some point, the equilibrium arrives, I don't think it's a great delta. It's a special situation thing. Let's wait for what comes through. Then it'll probably be easier to assign some timelines to it. But right now, I think it's just a lot of hope that's building on it.
I was just looking at it. The peak for Yes Bank was February, 9th February to be precise. That's when the stock touched 31. I'm forgetting who was the suitor or the buzz back then. But it was, again, similar sort of buzz that got the stock to that level. But that was 31. Today, we're talking 17. So let's see. That's Yes Bank. Prakash, Coforge, another good quarter. Your thoughts? And what would you do with the stock?
So, this is a very consistent player, keeps delivering in its segment. But, how long will this brilliant runway last, given the situation in the US and particularly rest of the world? I mean, I would believe, some of these stocks are priced to perfection at some point. It'll be difficult for them to be able to keep delivering as per expectation. So it's good to temper down your expectation. I'm sure, once we hear the management, you'll get to understand a lot of things that are going their way and some which are not. So once that's understood, it's probably easier. But I'm staying away from IT generally by and large at the moment because, things could reverse very badly if something goes wrong on tariffs or the countries that come with these bilateral agreements are not very significant or relevant or impactful. You'll probably have a little bit of dilution on that. So I would stay away from IT. Of course, no taking away the fact that the numbers have been brilliant. Company continues to deliver, but it's priced to perfection.
Prashant, let's talk about wire and cables. Yesterday, RR Cable was the star. Today is Polycab's turn. So let's see if the numbers will be as good or not. Never a dull moment here. Do you like anything in this space? KEI, Polycab, RR Cable, any of them?
If you own them, it's worth holding on for the simple reason that the upcycle continues to favor most of these plays. But what's going to be interesting, what's going to be very interesting is the derivatives that go into manufacturing of all of these, so specialty polymers, whatever companies are there in that. So one of them happens to be from the Supreme group of companies. They supply a lot of these raw materials. So I think the space is expanding. The unorganized to organized shift is right there. It's going at full momentum. And the other thing is that all the lapses that you saw, leakages that you saw in terms of cash sales and all, it's completely out of the way. So there's a very different pace that they've set up, the organized pace. Competitive intensity has taken its toll, brought valuations down, but they're still richly valued given the growth expectation. So if I had to pick any of them, I would wait for weaker times in the market. But yeah, I would believe all of them, and we'll of course get to see what Polycab's the numbers tell you as far as the industry trend is concerned. But it seems quite promising.
Okay, all right, Prakash. I think the casualty of the morning could be Cummins. Because
Yes.
the global parent, they withdrew their guidance, and the commentary on India is very, very good. I'm just looking at a couple of sales notes. The India power generation revenue could come in that vicinity of around 850 crores approximately, which will be a degrowth from what we saw in the previous quarter, which was around 1,250 crores. And on a year-on-year basis as well, it will compare with around 940 crores. And because of that miss, it will lead to the India business as well missing estimates. How would you approach the stock?
So Nigel, that's a very important point. While everything's been very, very rosy in terms of numbers for till now at least, some of these realities tell you that things are not so. I mean, a lot of the business are not out of the woods. And you look at triangulate this with the IEX data in terms of power consumption, the trading of power that's going on, and we are getting into peak power consumption months for the next 3 months at least. With all of this, what it tells you is that there's going to be a shift in terms of leadership and the supply chain. Now, some of these players which enjoyed very superior demand trajectory will probably have to compromise or live with something where there's a shift that happens to lower cost or smaller units and more fragmented distribution and things like that. So my sense is you'll probably see a lot of the transformer companies do better, and a lot of the BESS play will start kind of contributing to power, which it hasn't in the last year. So I think a lot of people are gearing up for that, and that's where you should focus on. There are very few companies of scale, but whichever are there, you could probably gain much more than just the pure power generating, equipment. So I do agree there will be a pause, but Cummins has always done this. It's delivered even after these setbacks. So let the setback get digested, and if it's weak for some time, you'll probably start doing a little bit of bottom fishing here. But I think it will give you some time. 2,500 is where it will start kind of getting more attractive.
Okay. All right, Prakash, thanks very much. Great having that perspective. You have a good day, and we'll connect again soon.